Imagine a waterway so narrow that you could drive across its width in less than half an hour. Now imagine that nearly 1/5 of the world's oil supply depends on that same passage every single day. That is the Strait of Hormuz, a maritime corridor whose importance extends far beyond the Middle East. Every tanker passing through it carries not just crude oil, but the stability of global energy markets, manufacturing, transportation, and international trade. In recent weeks, attention has focused on a fundamental question: who truly controls this strategic choke point? Public statements have projected confidence that commercial shipping remains secure, yet shipping patterns suggest a more complicated picture. Rather than accepting either narrative at face value, it is more useful to examine the measurable indicators that reveal how companies are actually responding to the situation. Shipping companies make decisions based on risk, not political messaging. Every voyage involves insurance costs, crew safety, cargo value, and operational certainty. When those risks increase, commercial behavior changes almost immediately. Tankers delay departures, alter routes, or wait for clearer conditions before entering contested waters. These practical decisions often reveal more about perceived security than official statements alone, because commercial operators have little incentive to ignore real-world dangers. Another important observation is that modern conflicts influence markets long before they directly affect military outcomes. Energy markets respond to expectations as much as physical supply. Investors continuously evaluate whether tensions are temporary, whether diplomacy may reduce risks, or whether disruptions could become prolonged. As a result, financial markets sometimes move differently from what many observers expect. Price movements may reflect confidence about future stability rather than the immediate conditions visible on the ground. Understanding this distinction is essential, because markets are constantly pricing future expectations, not simply today's headlines. The situation also reminds us that strategic competition is no longer defined solely by military deployments. Economic infrastructure, maritime logistics, insurance markets, commercial shipping networks, and global supply chains have become equally important components of geopolitical influence. A disruption affecting one critical waterway can influence industries and consumers thousands of kilometers away, demonstrating how interconnected the modern global economy has become. Perhaps the most valuable lesson is this: when public narratives, commercial behavior, and market signals begin pointing in different directions, analysts should pay closer attention to the underlying data rather than the loudest headlines. Often, the quiet numbers reveal changes that political messaging alone cannot fully explain. If tensions around the Strait of Hormuz continue, many will naturally ask whether alternative routes can solve the problem. At first glance, building new pipelines or expanding existing transport corridors appears to offer a straightforward solution. Moving energy over land instead of through contested waterways sounds attractive in theory. In practice, however, infrastructure is measured in years, not weeks or months. Large-scale energy projects require significant investment, stable political conditions, international cooperation, environmental approvals, and long-term security before they become operational. Even after construction, infrastructure introduces its own strategic challenges. Pipelines, processing facilities, storage terminals, and export hubs are fixed assets. Unlike commercial ships that can alter routes, permanent infrastructure remains geographically exposed. Protecting these facilities requires continuous security planning, making resilience just as important as construction itself. In geopolitics, building infrastructure is only the first step. Ensuring its long-term reliability is often the greater challenge. Diplomacy also plays a decisive role. Regional energy projects depend on cooperation among neighboring states, whose political priorities, security concerns, and economic interests may not always align. As international relationships evolve, infrastructure decisions increasingly reflect diplomatic realities as much as engineering capabilities. Successful energy corridors therefore require not only financial investment, but also sustained political stability. Meanwhile, governments continue balancing military readiness with diplomatic engagement. Strong public statements can reassure allies, influence markets, and communicate resolve during periods of uncertainty. At the same time, most governments also seek to preserve opportunities for negotiation because prolonged instability benefits few participants. Strategic signaling and diplomatic flexibility often operate simultaneously rather than as opposing approaches. Ultimately, I believe this story is about much more than a single shipping route. It illustrates how modern geopolitics functions through the interaction of multiple systems: military strategy, commercial logistics, financial markets, infrastructure, diplomacy, and public perception. None of these elements operates independently. Together, they determine how resilient the international system remains during periods of uncertainty. The Strait of Hormuz is therefore more than a geographic passage. It is a strategic indicator. By observing shipping behavior, infrastructure planning, diplomatic engagement, and market expectations together, we gain a clearer understanding of how global power operates in the 21st century. Sometimes the most important changes are not announced through dramatic headlines. They emerge gradually through patterns that only become visible when we look beyond the immediate news cycle.